Welcome back, and joining us now on the show is Kunal Shah of Nirmal Bang Securities. Kunal, hi, good to have you. And I want to start talking about metals first because it has been a couple of good weeks when you look at all the industrial metals there. And then, of course, in the last couple of sessions, there has been a slight profit taking, and that is because of the strengthened US dollar index. How would you look at these corrections, and would you say that these are now even better accumulation levels?
I think that there can be a room for another some more correction because the way on one hand we get the news from the FOMC meeting that the rates are going to be cut at least 3 times during this year, but on another hand the economic data which are coming out of US all are indicating towards the stronger economy. So there is a complete contradiction as far as the policy is concerned. So going forward, what I expect is some more profit taking can come in a near term because of the strength in US dollar, but the broader trend will continue to remain very strong going forward. So I'm quite optimistic about the overall outlook of metals, mainly because of the expectation of the easy monetary policy going to be adopted by UK. Today we saw Switzerland coming up with quarter basis point rate cut, UK, US, all of these big economies developed economies are going to cut their interest rate. And that is basically going to be very beneficial as far as the broader commodities and metals specific.
Kunal, so while you look at a further correction, I mean, as you said, there's still a way down from here. Where would you see, and how much more correction are you anticipating, and within what much time?
So I see a maximum, 1 to 2% correction, not much, when it comes to copper. Copper looks quite strong fundamentally going forward because of the expectation of a lot of smelters are going to cut their production from China. Aluminum maximum till 200 rupees on MCX, zinc maximum till 215 to 16. These are the levels where I will again, recommend to accumulate them. And I foresee going forward during the month of April, May, the rally should resume, anticipating the rate cut. So outlook remains quite positive.
All right. There also is a report from Trafigura which says that there is never going to be a peak copper demand, at least in the not couple of decades going forward. And also by 2030, they expect that 5 to 6 million tons of a deficit is what we could be looking at by that time. So would you say a nearer term, a longer term does look bullish for copper, especially when you have a Citi and a Bank of America and a Goldman Sachs talking about levels of 10,000 and 15,000 going forward?
So it's all about how the new age demand, especially in the EV from the EV vehicles. So the overall long-term brighter prospect of the copper is mainly because of the new emergence of the EV. Recently, what I've been reading about the EV and what I'm understanding is after a huge spurt in the European economies, in China, we are seeing again slowdown in the EV demand. So it all depends upon how the EV demand translates, especially for copper. But looking at the way there is a excessive smelting capacity going to go out from China, and the way India, Vietnam, Africa, some Latin American economies, the way the demand is emerging out of all of them. So just to give you a number, so India's copper demand is going to rise from 1.5 million ton to 3 million ton in next 4 to 5 years. So another 1.5 million ton of copper have to be produced more. And if you see the supply side, we are not seeing a major any new capacity being added. So this is going to be very tricky. And looking at the demand supply, yes, I would say that we are in a structural bull run. We are going to see bouts of correction due to negative news from China, but the structural trend is definitely on the upside. And copper, I will not be surprised even if this year it tests, 9,700, 9,800, or perhaps even $10,000. So the realistic targets are another 5 to 8% upside from here cannot be ruled out.
All right, so very, very bullish copper cues coming in there. Kunal, also, another interesting development that metals clearly have seen is that Saudi Arabia, which is now clearly diversifying away from energy into minerals, metals, logistics, etc. And there have been reports suggesting that as standing, if there is an LME approval, then we could be looking at warehouses being situated in Jeddah, which is Saudi Arabia. I mean, as of now, and this perhaps would be a first in many, many years there, how are you looking at Gulf or Middle East as well emerging emerging as a stronger player when it comes to metals?
Yeah, it's a need for an hour. The way the Neom city in Saudi Arabia is basically getting built at the pace it is, the way it is constructed right now. So we have Dubai right now, and now we are going to, after 5 years down the line, we are going to have Neom. So this kind of warehouse in Saudi Arabia is definitely a need for an hour, and this is very positive from the LME point of view, from the metal market point of view. The more and more locations being created, especially in this part of the Middle East world where the demand is rising at a rapid pace, it is definitely a good move, and I would say need for an hour. So something what market wanted, and that's what they are getting.
Oh, yes, and a market to keep an eye on, absolutely. Kunal, you've spoken to us about copper, but talk to us about the ferrous metals also, because iron ore and steel, while on a month-on-month basis, are still trading in the negative, but this week has been quite bullish. There has been opportunity buying on the lower side. You also are looking at a Fed rate out, a cut coming in a certain future there. And then it also has been about the Chinese economic data, which is getting better. The month of Jan and Feb definitely has put in better numbers as compared to last year.
So when you track fundamentals of China and Chinese economy and the demand supply, and then on another hand you have a macro that is the rate cut narrative. So when the rate cut narratives basically gets played, all commodities, ferrous, non-ferrous, everything gets lift up by the rate cut. So we are not talking about a quarter basis point rate cut. Every rate cut will have some sort of positive impact, not on a material basis, but on the sentimental basis. So suddenly, whenever you see a rate cut, the mining players, the players, everyone wants to be in commodity whenever there is a rate cut cycle taking place. And that's what makes me believe that the worst is over for iron ore, for steel, for ferrous. I think the worst is over. And from the April month, we are going to see, in spite of all the negative news in China, we have not seen a crash taking place in the steel market in China. We've seen softening of steel prices. And now with the rate cut narrative, I am expecting steel prices again to move up. Even if the demand from China is not very strong, I am expecting another 4 to 5% upside in next quarter. And I think steel prices are going to go up in India, in China, everywhere. So my outlook on steel is bullish going forward. I'm not expecting a spectacular gain like we saw in the year 2021 to 2022, but a moderate 4 to 5% upside is something which is the base case scenario what we are working on. So my outlook remains quite positive because of the macro factors.
All right. A final question then, Kunal, and you've been always bullish on precious metals as well, and gold has hit an all-time high, way ahead than what the street really thought these levels to be. I mean, these are the numbers we anticipated in perhaps the fourth quarter or the third quarter at best. With a bit of a profit taking that we are seeing right now, do you think this can further play out in sense of lower correction? And where do you see new accumulation levels?
Yeah, so it's just a profit taking, and you quite rightly pointed out. So whatever levels people are working out in the second half of the year, they've been met in the first half of the year, not even first half, in 3 months of the 2024. So the run-up has been too fast, too soon, but outlook continue to remain bullish. There is no way, fundamentally, anyone would say that gold has moved up at a time when it should have gone down drastically. So last year, when the rate cycle in last 2 years, the US interest rate were at 5.5%, and at that time gold was at $2,000. So now with US rates are going to go down, Europe rates are going to go down, UK rates are going to go down. All these ETFs who have been the net sellers in the gold market from last 2 years, and these are the people who are buying Bitcoin and blah, 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 other asset class, they are going to return to the market. So gold market is already very tight. And in this tight market, I'm expecting in the second half, the ETF demand is going to return to the market. So we are in a market where historically central bank used to buy 300, 400 tons of gold. They are buying now 1100 tons of gold. And now the expectation of the rate cuts will bring ETF demand. So we are headed for a perfect storm in the second half of the year. And the moment rate cut in US will be announced, gold is going to rally. So my target, I'm working this year, $23 to $2,400, first $2,300, next $2,400. I'm quite optimistic. But yes, it's going to go up.
All right, Kunal, thank you so much for joining us. So very bullish precious metals and bullish in base metals as well. Kunal, as always, thank you so much for joining us. But with that, it's time for a break. Business Lunch will take all the action ahead.